So just quickly on Sphere, stock was up 11% yesterday. It's up almost
Yeah.
30%. Up almost 30% since we made it an active long, like 2 or 3 weeks ago, the end of third week of August. And the thesis is playing out with the Sphere experience with Wizard of Oz, continuing to sell out, performing very well. We put out a data note last week. We continue to track it, and the data continues to look strong. The volume yesterday was pretty crazy on the stock up 11%. I think there's a couple things going on. Of course, the signal's been sniffing this out, and everything's been being corroborated with the fundamentals and the data that we're tracking, which is kind of like the trifecta that you look for. In addition to the quads, right? We mentioned that this one was a kind of a cyclical, smaller cap, stylistically something that should work, in this quad regime. But the thing is that what was interesting is, so MSG Networks, it's a RSN. It's a total dog. Losing subscribers, weighs on adjusted operating income. Historically, it's been viewed that this is actually a negative equity drag on the company. And part of the reason why we were short Sphere for a period was because we had a couple negative catalysts coming down the pike with unfavorable renewal. And then B, given the long-term view of this entity, the risk is that as Sphere, the venue continues to grow in scale, any incremental AOI or cash flows that get spun off that business will just have to be reinvested or effectively subsidize declines in the RSN business. So on a consolidated basis, that doesn't really make for a great outcome for the stock. Well, yesterday, we found out that MSG Network CEO is gone. And I think what this is implying and what the stock is starting to sniff out is them probably getting out of the RSN business. So trying to get MSGN off the books, which could involve a sale to another media company that has a much larger subscriber base that they can distribute that content and effectively absorb some of the cost issues, and within a just by being able to spread that content cost over a larger base, and also be able to subsidize some of the growth without it having a real material negative impact on the equity value like it is having, I think, on Sphere. So to the extent that that gets taken off the books or sold, that's going to be a positive event. And maybe that's kind of what we saw a little bit happening in the stock yesterday. That's just speculation on my part, but as far as the core goes and the data goes, like, things are tracking pretty well here. We said that it could be a high 50 stock. That's kind of where we are today. But, as long as the signal continues to tell us that we're in the right direction, the data continues to track, and we still see upside in our numbers, we're gonna stick with this thing, right? Because, expensive can get more expensive, cheap can get cheaper, as we say, but that's what we're doing.
When you get an explosion in a stock's price, a former self would have sold some too early, right? My bosses would have sold some too early, maybe sold it all too early. I mean, selling winners too early is now, and has been in the history of generating alpha, actually a cardinal sin. What is actually happening in today's market structure is that winners win more. Winners attract a crowd. A name like Sphere is really interesting for the crowd and very predictable for the crowd at Robinhood to chase. Why? Because it's a place where you go watch the Wizard of freaking Oz. Okay, they think they understand it. So there's a lot to this. Don't get mad at it. Embrace the process that we've created to capitalize on it.
Thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.